Welcome to the War Chest Strategy Masterclass, where we teach you how to build a war chest in today's wartime economy. And so who we're talking to here are high-income military retirees, and we'll talk about what that means. I think a lot of you are going to find yourself in that boat, may not realize it. But we're going to show you how to protect your wealth, create other alternative tax-free income streams without having to throw your money in the stock market and be risky, and without having to do a bunch of crazy tax planning that seems either confusing or maybe too much red tape. And of course, we know there's a lot of red tape when it comes to anything military related. And so the main questions here are usually around, what do I do about some military benefits? So we're going to get into all this. So stick with us. And I think you're going to learn a lot. Before we get into military benefits questions, I just got to be upfront and talk about, what do I actually hear? I've been doing this for a long time and had thousands of conversations with military retirees. I didn't retire out of the military myself. I graduated West Point in 2002 and served until 2008, right during the last financial crisis. But I got into this financial industry, and my clients, when I first started out, tended to be senior officers and senior NCOs who had done a career. And so I had a unique perspective having not done that, and I was intrigued by it. But of course, I was helping them with their finances and seeing stuff from the inside. And what I hear most often is, I don't know what I want to do when I grow up. Some version of that. And then, of course, I just don't know what I don't know. Kind of a shocking realization. Hey, we've been in this bubble in the military. That's part of the sacrifice of serving the country. Sacrificing not just opportunities, but keeping up to date with everything that's been going on in the civilian world. And then another big concern is just kind of looking around. Hey, me and my buddies don't talk about this kind of stuff. Am I doing all right? Where am I at? And what I'm going to say is, don't compare yourself to your peers, your military peers. Everybody's had their different situations. And we all know what everybody's paycheck was. Same. You can look at pay chart. So that part's easy. Of course, people have different interests at different times. Some people get into real estate. Maybe their spouse has been fully employed the whole time. Don't worry about that, because compared to the average American, it's kind of sad to say this, if you're in this potential high income earner situation, you're in the top 10%, even if you haven't saved a dime. Just by having your pension gives you this huge leg up, let alone the VA disabilities and all the other pats in the back you're going to. So the whole point is, we can know what you want to do. We just need some time to get there. We need some confidence, and sometimes the money stuff gets in the way. The other thing is that we can simplify a lot of this, whether it's using technology or recognizing that maybe some of the places we were led to believe we needed to put all our money for retirement savings for things we're not going to touch for 30 years and just hoping it's going to work out. Maybe that was complex. And maybe it was complex for a reason. But if there's a way to simplify, and that's what we think the war chest can do, we can start to remove the financial uncertainty and take control of the things we can control. But ultimately, we're wondering, what is possible for you now? Getting out, now's your opportunity. Or maybe you've been out for a while and you're just finding this, and you're kind of in that phase where, hey, I've got things figured out, made some income, thinking maybe what's next, or maybe, hey, just when is my full retirement? Those pictures become more clear. It's of course difficult to have that amount of clarity when you're going through kind of a midlife transition or career progression, as our friends at Blue Water Advisors, Captain Mike Wallace, likes to say. All these things happening all at once. I call it military retirement decision creep. You're expecting to make just a handful of decisions. Hey, what kind of job do I want to do? Maybe where I want to live. And then, man, it's like the military won't even let me go. I got to make all these other decisions, and they're going to affect not just you, of course, in your career in the military, because a lot of that, you choose some of that career path, but a lot of it gets chosen for you. But now you can have more impact on those family decisions by choosing your career, and ultimately how you want to manage your money. And by managing your money, the better way to look at it is, how are you actually going to use the money? What's the point of saving it at all? And then here's what we're talking about, the decision creep. I mean, these are the main ones, of course, that we address here at US Vet Wealth to help people get these off your plate. It can be more simple than you realize. It's just, you're probably in a situation where you're like, oh no, I got to figure this out. I got to go learn all this. And I get lost doing the Google or talking to my buddies. Hey, what did you do? And unfortunately, unlike progressing through a military career, maybe asking what everybody else did isn't the best path ahead, because we know that when something crazy's going on, what does Sun Tzu say? It's like, hey, if the enemy's beating himself, just keep letting them do it. When there's consensus, or what we call a red ocean, those who go and find and create their own blue ocean, things get slightly easier for them. And so how are we going to get there? Well, first, we're going to talk about the fixed things, the things that we do. They're easy to understand if we just look at them clearly. I mean, it's right there in the military regulations, how this stuff works. We got calculators, all from the government websites. We'll show you how to use that stuff. But that's known. What's unknown is the chaos, the financial landscape that's happening right now. And this isn't political. This is just looking at hard reality and numbers. But we have to address this stuff. And then the decision variables, the things that impact the decisions are known to you because those decisions are based on your individual variables, right? Things like how healthy you are, how much have you saved, how old are you, how old are your kids? It's just going to be different for everybody. Where do you even care about as an income level versus what the assumed success thing is? And then, of course, we're going to talk about the alternatives that are a better fit for the right people, because we know we've got some certainty about the financial uncertainty of what's going on in our world. So we want to answer two main questions. How do I protect what I've already got? Pension, your VA disability benefits, what you've saved, your lifestyle. And then eventually, when you want to live off this income or live off the savings as income, how do you use it? So if something horrible happens and you need emergency savings, or worst case scenario, we call it the get hit by a bus situation, you need a death benefit, enough that would take care of your family. The big question is SBP enough for that? Obviously, whenever you withdraw your income, how are you going to do that in a way that you can be sure it's going to be there, knowing that there's going to be costs, and biggest cost of all is taxes, and there's risk of those taxes going up. Of course, inflation is a problem where if we're not beating inflation, then our dollar is actually losing value. And of course, with markets at all-time highs, we can say, hey, 30 years from now, the market's going to be up based on history. But what about next year? What about the year you want to retire and start using your money? We just never know if something would happen in that particular year. Looking back in 30-year averages isn't as useful as we get older. So that's what we'll talk about with War Chest Strategy, how we're going to answer these questions. Specifically, we're talking about safe money here, protecting your principal. Like that's the whole point. Wealth insurance is the idea. Let's insure what you got, whether you're building wealth to create more assets to leverage for more income as a business owner or investor, or you just want to guarantee your lifestyle and just kind of get that off your back. But the pension isn't quite enough. How do I get that next chunk on a monthly or annual basis that's going to allow me to feel more comfortable at everything else? Biggest way to protect your principal is to be tax advantaged. The more tax-free income you can have, well, that's you keeping more of your assets. But we got to beat inflation. So we still got to be invested. We do that through indexing. That'll be a very important aspect of this presentation to learn here at the end. And of course, the difference between a lump sum death benefit and a monthly stipend or actually annuity. Your military pension's an annuity. The SBP is a function of that. It is also an annuity. It comes out monthly with a larger, just one-time death benefit. Again, given that highly unlikely scenario of you get hit by a bus, we want to talk about having that benefit as probably more useful to your family. But then another thing that doesn't come up very often for military retirees is this idea of long-term care. We think, we got VA or TRICARE or something, but we're talking about later in life. The less likely scenario is you get hit by a bus. The more likely scenario is you get sick and live a long time and need some help. So the ability to use death benefits as assisted living, which doesn't mean you have to go to a nursing home, that's a feature of this as well. So kind of knock that off the table. And then we're going to talk about this idea of a private pension, which is income. Your military pension is coming to you, can't control it. You created it through time and service, and you earned what you earned. Now, creating your second stream of income or any additional streams of income can be done through leveraging your existing savings and assets. So whether that's through a savings plan, retirement, or money you got laying around, or even old life insurance policies, it's ways of leveraging those assets, that cash value, to turn it into income. That's what a pension is. That's what an annuity is. So we're really talking about income. Life insurance is income replacement, right? Focusing on the income, we call it the private pension, give you more control. How you design it is your choice here. We're explaining how the products work so that you can choose how you want to design it, because the design is variable. It's not like you're buying a share in a stock. You get to create a contract. So what it gives you is the ability to increase your withdrawal rates above amounts that you worry about running out, the ability to guarantee that lifetime income, and the option for joint income, so that no matter which spouse passes away first, you get that stream of income continue on. And then if there's any left over, there would be a death benefit as well to leave to any children. And we're going to talk about things like fee structures and step-ups and lock-ins. That's how the principal protection works. But like I said, we got chaos in the economy, so we need to kind of look at the bigger picture. A couple main points of this whole concept is that for healthy military retirees who don't like the idea of participating in military benefits that are going to cost them financially in the short term and don't know about the alternative and kind of get stuck in it. And when you do the math of hundreds of millions of dollars that go pensions every year, what percentage of that is cost for survivor benefit plan that could ultimately be redirected into their pocket, to their bank account so they could use it now versus having it stuck as a mate. So in aggregate, that's just a lot of money that I think could help the American people, our communities better if you had it in your bank account now that you could potentially use it, or if maybe gave you more confidence or gave you a job that fit you better. Like, this is compounding positivity by just having more confidence in where your dollars are. Because when you're stepping out of the military into the civilian population, you probably see it when you're walking around, we're not doing so hot. And so when it comes to things like various health costs, benefits, or whatever, we typically are comparing ourselves to just the military people around us. But no, we need to compare ourselves to the American population. And I think we need, when I say sickly, I don't just mean in the health thing. We're struggling and we need the leadership. So more former military leaders who have more money, gives them a little more confidence, gives them more opportunity to do the thing they want to do, find a sense of purpose in post-military life versus just keeping their head in a box. They want to go do something. And I think looking around us, we've got problems to solve. So that's why we need you. We want to redirect that wealth, and who better to do it than a military retiree, been through it, can just put themselves in situations and figure it out. It's just that whole paycheck thing and benefits thing isn't locked in anymore. So we got to recreate that to do our mission, save America. All right. So that's our motto: privatize, protect, and profit, rather than save, invest, and insure. That's what everybody else is doing. We want to be action oriented because you're in a different situation as a high income retiree or a potential high income retiree. You define whatever that is. Typically, that means around 250,000 if we're comparing ourselves by the averages. But we're going to focus on your income earning potential, whether that means creating existing assets into income. But your asset is also whatever time you got left and your talents and your treasure. So time, talent, and treasure. How do we turn that into income that is guaranteed so that you can have that part secure? Because your unique health, you've got good health still, and you're going to be around for a long time. That is the asset. That's what creates the income. That creates the reason for it. Like, you want to enjoy all this. So how do we ensure the wealth? Wealth is more than about money. So what are we talking about here? Again, this isn't really rank based. This is a snapshot of kind of what our clientele is by rank average. It's just that folks who tend to find us. So yeah, we have more senior officers than senior NCO, but I've actually met some of the most successful and wealthy veterans out there that came from the enlisted class. So it's not about that. It's just a function of obviously what information people have learned before, what kind of communities they're around, and we know how the pay structure works. Colonels are going to have more money than the enlisted folks, and we know the reality of that. But that doesn't mean that the colonels and the captains who are also struggling with some decisions or other situations through their own transition, that they shouldn't also be aware of it. But the consensus, of course, or the vast majority of the information is talking to the vast majority of people getting out of the military, which is not going to be the few officers that retire, right? So just a numbers thing here. But the point is, or anyone from any of these groups does have the potential as a veteran to earn $250K in this economy in America. Takes some good networking. Obviously, you got to increase your talents and catch up to some civilian counterparts. But we've seen it done, especially if maybe the spouse is working as well. Surprisingly, it's actually not that hard to get there. A lot of folks just are kind of surprised when they're there. And this is what the Blue Water guys tell us, is it isn't until the third month after they've gotten their new job and their retirement pension been coming in and VA disability, that all of a sudden they look at their bank account and it's just added up. And they're like, oh gosh, I knew I was going to get paid more, did the salary negotiation and everything. But until it hits your bank account, you just don't quite realize the potential. So this is just a hint. It's out there. Throughout the talk today, we're gonna go through some scenarios, but I would just want to lay out up front as an example. So we're going to use the '06 as an example. Just extrapolate your numbers and situation as needed. And of course, if you do a consultation with us, we'll do that. But his situation, similar to what we see often, career colonel. He's got a year or two before retirement. He's around age 50 and started thinking about retirement. Maybe went to the ETAP briefing and has the main questions. What does he do about SPP? How does he protect and use his TSP? Because he hasn't really been paying attention to that. He had kind of known about SPP, but didn't really think about it until he sat down in that briefing and got the whole cost structure of it and realized that existing whole life policy he's got and SGLI coverage weren't going to be enough. Or even if you replaced SGLI with another term, that wasn't going to be enough to protect his pension. And so it just like, wow, I didn't expect all this. What do I do about it? And then when it comes to retirement savings, like there's not necessarily a reason to make any changes, but a lot of other things are moving and things realizing, there's other approaches out there to leveraging these assets I've saved. Maybe there's a different way to protect and use the TSP. But these are things that kind of get in the way during the process. We realize that priority, the real concern, the real stressor is whether a new career or a lifestyle, how am I replacing the income to maintain that? So here's what we did. At age 50, the goal was to get him to income independence by 10 years. So what we're going to talk about is how we did this in this presentation. Essentially, Any money he would have paid into SPP, we're going to redirect that into universal life insurance. This gives us flexibility. And with that, we're able to create for him a $2.5 million lump sum death benefit in that hit by bus scenario. And then after 10 years, again, money he just redirected that otherwise would have gone into SPP, he's now created an account worth $400,000. It's protected. He can use it. It's also tax-free. After those 10 years and starts pulling it out for the next 30, he's going to be able to collect over $1 million of tax-free income. Then the other thing we did for him was protected all $750,000 of him and his wife's assets into joint lifetime income. So after 10 years, they were able to pull another $86,000 out. Some of that tax-free, depending if it was Roth, and some of it would still be taxable. But essentially, by being able to create the cash value in the insurance, and then since he didn't die, started drawing income, and of course, protected the TSP, couldn't use that at age 50 anyways, got to wait till age 60 for qualified retirement assets. 59 and a half is the official age from the IRS, but once you start drawing that income, so now you can be fully retired and be able to pull out $86,000. So in aggregate, we think he's now duplicated his military pension with this private pension. Sources to draw income from the war chest. It can be used other ways, but if we're talking about retirement income, this is what it looks like. Wanted to point out a couple things we appreciate folks saying about us. Mike says, current, relevant, and credible resource. That's what we're trying to be, sharing all this information so that you can make your own choices. We want to earn your trust by being professional. That's why we put in years of effort trying to make sure we've got the right offers for the right people. And we tell people, hey, if our stuff's not right for you, or if you should do the government programs or talk to somebody else, like, we're going to let you know because we want you to, as Matt said, move at your own pace, do your own research. And yeah, if you've got other professionals in your camp, like, talk to them and have them talk to us because what we don't want to do is make you feel like you're making a decision with an old friend or something like that. Like, no, we just happen to focus on this thing, and other financial professionals might not. They might have some opinions and some dogma, stuff that maybe we can't get around, and nothing we can do about that, but we just want to be open, that we're not trying to be, sneak you away from your financial advisor. That's why we say we're not doing comprehensive financial planning over here. We're solving a problem. We're helping you answer these questions. Hey, at the end of the day, this is a discussion about better life insurance products for your situation and whether or not they be right. We're talking about index universal life and fixed index annuities. Do all the Googling and watch all the Dave Ramsey videos. Go ahead. Doesn't bother. But what we're doing is not worrying about ensuring your death. We know that that's going to happen. What we want to maximize is your income producing potential. That's what your life is about, or that's what your life can create. So we want to max that. This is the right place. If you are somebody who's just going to nitpick all this, like, I'm not trying to convince you on anything. But at some point, we do have to realize that the general advice for the military financial education is good in general, but maybe not for every single individual. And so for some of us, it is important to be aware of all the other financial things that are out there, because clearly the wealthy don't do things the same as active military in America. So stick with us here for 60 minutes or so, and I think you're going to learn a new perspective, and it'll be hopeful to some, but not all. So what we tend to find is here's who we help the most. Again, we talked about the kind of generic financial education that kind of gets people started in finance, but it causes these problems that we're dealing with right at military retirement. You didn't learn about the SPP until your retirement briefing. So now you're stuck with that. Then, even if you have saved very well, likely the majority of that money is kind of locked up in these retirement accounts. Yes, you could use them, but there'd be penalties or taxes that you weren't expecting. And unfortunately, a lot of veterans do have to tap into those assets because that's where they save. They didn't have an in-between. We're going to do with the war chest. And the fact that you've got above average health, and when you're going through the military medical process, those are all just checklists to get you deployed. And then when you go through VA disability, you're trying to look sick on paper so that you get higher VA disability benefits, but all that creates this kind of negative health mindset or lack of care. And that can backfire when it comes to qualifying for insurance. The good news is the insurance companies are comparing you to the average American. So you're still you have a pretty good chance of getting great ratings. I just got a 56-year-old admiral approved at Preferred Plus ratings. Like, I was shocked. That was really cool. I lock him in because the point is, with government insurance, everybody's paying the same price. Why is a 50-year-old colonel paying the same price for SGLI as a 20-year-old private? That's not how individual life insurance works. That's how group life insurance works. And of course, timelines come up. Which things should we prioritize? Well, I always think the priority, of course, is getting the job, figuring out what you want to do when you grow up. We can prioritize some of these little things to knock off, and we can tell you when to do it, so that you can wait and not worry about it now, or just get it out of the way as you're moving through wherever you are in your career progression. If we're talking about building wealth, your net worth is your network, as they say. So this is another thing that gets in the way. How do we leverage our networks or create a network? You get these new sources of income, create my opportunities. That's where we can get the most bang for our buck, but it's also the biggest barrier to entry, or feels like it, unless you got some inside baseball, which we do. And of course, we've already got the network in place with Blue Water Advisors that you can tap into, with over 400 military retirees who have gone through their program, landed a new career, are at other corporations and jobs all over the place right now. And so we've already got people for you to talk to if you are interested in learning more about opportunities at that company. We can help you there. And we think that's obviously a vital part of the war chest, is increasing your network. And sometimes you're tapping into this, sometimes you're not. But we think, so we keep that. Don't like to bash on Dave Ramsey. It's just, the point is, obviously he's the standard face of the get out of debt and start saving for retirement, the kind of long-term financial planning. And I call it the low income style. Get out of debt. I don't have enough money. I got to sacrifice to save. And there might have been a time in our lives where we were there, but that's why I call it the slow income plan. We just got to wait and hope and keep building, and then hope that our financial plan meets the economy at the time we want to retire. And ever since the iPhone came out, I've been finding this ridiculous, but I think it's really come to a head here in recent years with AI. And so while this approach got us to a point right now where we can really make decisions to capitalize on doing this till now, and maybe we keep some of this in place and just do a little bit of extra with the war chest. But if we're thinking, oh, this is the only way and the be all end all way for everybody, every military, all right, then yeah, this is not the right presentation for you. But if you felt kind of stuck in that approach, we can take the next step. If we're just kind of going through the motions of military transition, I think we get all that. Or of course, if we're just expecting to hand a resume to somebody and that's going to check a box to get me a job, or any of these decisions, now's the time to kind of stop following orders, because the SBP decision itself, if we look at the numbers of retirees who stick with it versus don't take it, it's right down Pareto's principle, 80-20. So the 80-20 rule holds in a lot of things. So what we want to focus on is not necessarily about, hey, what everybody else is doing is wrong. We're not just saying that. It's just, by definition, if everybody's doing it, that's average. It really leads to kind of mediocrity. And I've seen that backfire. People, maybe even they've have wealth and they're just kind of like, I don't know what I did it for. I don't know what I did all those years for. We're trying to minimize any of that potential regret. And this is also really about efficiency. All right, so how do I spend 20% to get 80% of the results? So we're going to incorporate that into this program as well. Because here's the moral of the story. It's always been your money. That's the one thing about military life. When you got that benefit, paycheck, TDY payment, it came to you, right? And so you got to choose what to do with it. It's the one thing you had choice on. Now you're getting more choice. And this is just a friendly reminder to say, hey, once we're out of the military, it is simply time to stop following orders, especially when it comes to controlling the sources of your income. Because we think you're a high performer, which gives you way higher probabilities of great results when you consider all the other compounding variables that can help you build wealth. Because you've got the high income earning potential, and just looking at a quick snapshot of your potential, I mean, the pension's locked in, pretty good chance you're going to get employed somewhere. At that point, it just becomes a function of, do you want to get promoted? Do you want to go out on your own? Start owning businesses? Do you have outside investments? But we often limit ourselves to this low six-figure income and forget that if we set the bar higher, it's just realizing it's available, at least, opportunities start to open up. And then you got to figure out what you're going to do with all that money. Because if we're just putting it on the traditional financial planning roadmap where all these things are supposed to happen in life, it's like, yeah, we're Americans. Like, yeah, we know this, but it doesn't play out as simply as this. So we just assume that all the money's going to work out. We're always going to have enough when we want, and no other greater opportunity to create better lifestyles is not going to pop up. Like, and even if we do save all the money, it's just going to pass on, and we couldn't use it early on if we wanted to. Like, because there's so much fear of, oh, did I hit these goals? Did I check these American dream boxes? And so what happens is people end up not using their money. I mean, they might have a nice retirement lifestyle and golf a lot, but you're never going to spend your last dime because there's so much fear about the healthcare needs. And so dying wealthy is a great goal, of course, but was it enjoyed? Was it enjoyable the whole time? Or did we not have time or the ability to focus on our health to prevent some of those negative health issues later in life? Because that's, of course, the biggest cost overall. So we think that's it. It's 2024. There's got to be more to all this. And, that's our theme here. The old approach is all about, all right, you got all these different accounts. When are you going to use which one? What are the tax impacts going to be? And it's like, all right, well, obviously we got to pay some sort of advisor or planner, and no problem. There's a fees, but then there's fees on all this other stuff, and things are changing. So, and they're moving jobs. So maybe I got to roll over my retirement account. And does it have to be that way? Or do we have just capture of the system? We're assuming that unless I'm doing this on my own, I don't have it in my control. So we want to focus on what you can. So I think instead of thinking the 30-year retirement plan, what if we were just sitting here, we did a Zoom call similar to this 3 years from today, and then looking back at the experience from 3 years from now, what would have to happen both personally and professionally for you to be happy with your progress? Instead of 1 year, all right, where do I want to be when I retire in 1 year? Or what golf course do I want to be living on in 30 years? You can have more impact on your life in these next 3 years, and then roll it forward 3 years. Keep rolling it that way. And that focus is going to allow you to keep networking and finding new options for you. And we want to give you the financial security around that as well, because more specifically, which dangers are going to get in the way? What opportunities are going to pop up that we want to be able to feel confident we can jump on? And then what strengths can you then lean into? The economy right now is for those leaning in their strengths and standing out in a unique way, or maybe building a new talent or skill set that isn't a certification or a degree, just because it doesn't exist for that thing yet, right? That's the realities of the digital economy. And so you just got to be curious enough to look into it. But the dangers, of course, especially when it comes to money, this is what we're trying to help out with the most. A couple things we're more aware of course, the various things at military retirement, you're just getting in the way. And of course, what your health situation is. But some of the things we can't control are what's going on in the economy and society as a whole. It's just going to impact all aspects of your life here, what's important for you, how you are earning money, what you're doing with your wealth, what kind of lifestyle you're living. Money is at the center of it. Really, income is at the center of it all. So here's our big idea. We're not chasing those goals. Kids going to college and buy a retirement second home. Those are just things that need to be there anyway. So we want to build systems that give us flexibility. Use it when needed is the approach. That kind of bases back on one of the first books that woke me up when I was a young officer in the Army, fresh out of West Point, had no idea any of this stuff. Somebody told me Rich Dad poured out. I didn't know. It's a clear way to explain what's going on. We know we can either be in one box where we're an employee, where somebody else controls our time and our income, and maybe even our ability to increase our talents. But when you're self-employed, you've got more time. You can control your time. You can increase your talents more freely, but less secure, of course. And oftentimes, self-employed people like myself have really just created a job for themselves. And so it's stressful. And so we always often hear that the goal is to become a business owner then, where you can have other people working for you. And eventually you're a business owner such to the point where you're not even involved anymore, where really you're an investor. You could invest into other businesses as well. Or you could just have enough money to invest in markets, real estate, investment vehicles, whatever. You're an investor in something that's returning enough for you to provide income. So that's what income investors do. Obviously, that's when they say, hey, the wealthy don't pay taxes. Well, yeah, it's because they're living off of their investment money. That's where they can do the tax differential, do the various tax harvesting. So with the War Chest, we can get the tax advantages of the investor without the complications of tax harvesting. With insurance, it's all tax-free internally. So we just act the same way as an investor with assets you've already created or you will create as savings in the future. Again, we talked about private pension, controlled income, private source, we're mitigating taxes, give you more chance of predictability, at least in that 3-year time frame for sure, because we've got loss aversion, you've got more guarantees similar to your military pension, but also we can give you access, the ability to use your funds in those next 3 to 10 years. Maybe if you weren't expecting it, or even if you are planning for it, to use it in an efficient way. So what's our system? Maximize sources of income. Obviously, the way to do that and make the most money would be to start a bunch of businesses and be successful. Great. But you've already gotten a couple of sources of income, new job, military pension, VA disability. So we want to protect against dangers, look for those opportunities, continue to use those opportunities to enhance your skills and strengths. And then you can make more money, and then it continues. So we're focusing on, rather than diversifying how your assets are invested or just doing that, point is diversification outcome. We want to increase the odds of positive outcomes. All right. Who am I? Who are we? Why listen to us? I'm Scott. This is my wife, Jen. I got in the Army in 2008, right during the financial crisis. And that was a big wake up call. And I've taken those lessons forward to help create this. My wife, Jen, is the host of the Holding Down the Fort podcast, and she's a Gold Star daughter. And so this military benefits situation because her dad would have earned a military pension. And so the way her family had to deal with a loss, we understand that things can go wrong. We want to take that into account as well. And then, of course, you meet everybody on our team if you're working with us. Mike, Trevor, Sandy, and Christy are great assets to what we're doing. Wanted to point out a couple things we appreciate folks saying about us. Mike says, current, relevant, and credible resource. That's where we're trying to be, sharing all this information so that you can make your own choices. We want to earn your trust by being professional. That's why we put in years of effort trying to make sure we've got the right offers for the right people. And we tell people, hey, if our stuff's not right for you, or if you should do the government programs or talk to somebody else, like we're going to let you know because we want you to, as Matt said, move at your own pace, do your own research. And yeah, if you've got other professionals in your camp, like talk to them and have them talk to us because what we don't want to do is make you feel like you're making a decision with an old friend or something like that. Like, no, we just happen to focus on this thing and other financial professionals might not. They might have some opinions and some dogma, stuff that maybe we can't get around and nothing we can do about that, but we just want to be open that we're not trying to be, sneak you away from your financial advisor. That's why we say we're not doing comprehensive financial planning over here. We're solving a problem. We're helping you answer these questions. And just a little more about kind of us over the years between, our team there. We've got, actually well over 30 years of combined experience talking to military retirees about these insurance vehicles as solutions. As we just, of course, had these conversations with people over the years. We've definitely helped those who wanted to not take SBP create an alternative. Essentially, we've redirected over $25 million of dollars that would have been stuck in SBP costs are now in somebody's insurance strategy, their war chest that they can use. And then, of course, now we've protected pensions, not by replacing the SBP monthly annuity. We've got lump sum death benefits out there that can fully protect the pension. So I write about these two strategies that we're going to talk about today in my books. Don't forget your war chest is talking about for the military retiree making the survivor benefit plan decision, figuring out what pension's worth. Talk about BGLI a little bit in there. And then, of course, if you do have decisions about, all right, what do I do with my retirement assets? That's what the 7-figure TSP to FIA rollover blueprint is about. So this outlines our two strategies. You can read these books as well. And then that'll lay it out in more specific detail so you can see what we do and see if you'd like to work with us. But speaking of books, a couple books really shaped this. So I think they're important to mention. I read America Alone probably back in 2005 or 2006, whenever it came out. And he talks about the demographics here. We're just not having enough babies. The Western world isn't. His thing at the time, obviously, this is back right after 9/11. So it was all about Islam's going to take over the world or whatever. So that's not my point. The point was just that the demographics, this just really woke me up to a broader problem that, sure, it might have geopolitical implications, but it also has financial ones. 4 agreements for me personally, as I was going through my transition, just important to, help me think like, hey, this is up to me to figure this out. I'm fully responsible to do my best, not take things personally, to be impeccable with your word, which means kind of like don't lie to yourself about what's really going on and don't make assumptions. And we'll talk about the competency crisis because I think a lot of people are just, our society right now is having a problem with people making a lot of assumptions, not facing reality, really trying to do their best, getting along to get along, and taking a lot of stuff very personally. It doesn't help. And that leaves us kind of stuck in a bubble. And this is actually a great book for new financial advisors, or maybe it would be a great book for people who are considering working with a traditional financial advisor. But what it explains here is just that, there's help out there. There's always expert help. Right? And so that's obviously true in the financial world, and that's us over here too, right? So being transparent about that. But what I did find, and obviously where I'm specializing in, is ultimately when it comes to protecting your assets, the best way we could do it is protecting against taxes. One adds a big positive compounding factor, the more you can protect against tax. This book came out in 2010, and I just had no idea at the time how our government spending and all that kind of stuff worked. And it also introduced me to versions of this insurance design process that we'll go through. Here's our opportunity. We got an evolving economy. We think military retirees, at least going on ever since 2020, really, we're entering a whole new world. I think that means opportunity because we're just early adopters. Like innovation happens. Nothing new. It happens in the financial world too. Happened in the life insurance industry about 20 years ago. Those are the innovators. I was an early adopter about 2010. So I've been doing this type of approach for a while now. And we're just early in the game, for this approach. And could be others catch up to us, but it always takes a long time. So don't be surprised when you're around, hey, I've never heard of this before. Well, that's common. It's been common like that for a while. I think that's going to change. Like there isn't a large part of our population who uses this stuff. But that's why the financial people always focus on those who are wealthy. Like there aren't that many of them. And so they're all competing against each other. So we don't want to compete. We're just trying to be useful. Those who get it and are also early adopters or an early majority, they find us and it works out well. But I kind of write about all this in my first book, which is the longer one. I'm not recommending you go read this first. It's when you have time. If you want to kind of think about my bigger ideas on the whole economy, what opportunities military retirees can face. I also talk about a lot of the military benefits in here, and of course the insurance strategies as well. But I get in more to the personal stuff about, way digital economies, personal branding, marketing, that kind of stuff, networking. But when it comes to the finance side of it, what we want to do is think about how insurance carriers work versus the broad landscape of how everybody, what you see on TV every day. How's the stock market today? Right? They just put it out there to keep our attention, to keep us interested in it. And some people are smart enough and have time enough to digest it all. Yeah. And apply it to their life. Sure. They might be able to impact it. The insurance carriers are playing a different game, and they're not even allowed to aggressively invest their dollars, their clients' money, in other investment vehicles. They have to use very long-term, safe, secure, investment-grade corporate bonds, the government stuff, the AAA rated stuff. So insurance companies have to be safe with their money. They have to keep their policyholders' dollars in what's called the general account of the insurance company. So they are well funded, unlike many of the banks on Wall Street who are always trying to leverage their assets and risk it and trying to convince you to invest more money with them. Insurance companies aren't actually really good marketers. They don't have offices, really headquarters in like Wall Street. They're in Des Moines, Iowa. For the qualification process for life insurance, it's expensive to get people qualified for life insurance. They have to do suitability requirements for annuities. You can't just open an account in a week or a day or a minute with some of these online accounts. It takes weeks, if not months, to get their delivered. They reject people, even people with money, whether it's because of a health thing or they don't like their debt ratio. It's kind of more like going for a mortgage and a home purchase, right? It's not as complicated. You don't have to go visit a bunch of houses and stuff. But realize that in the world of life insurance, this is not a comparison to obviously how the investment works out, what the returns are to any other traditional financial thing. Comparing that wouldn't be useful. I mean, it's nice to see, all right, how to do versus this, because obviously there is a return on investment, but it's not comparing one stock investment versus one mutual fund versus another, right? This is a different asset class. They operate differently, and the way your money works inside in partnership with the insurance carriers works differently than owning a share of a fund. So we got to keep all that in mind, because if we're trying to reduce taxes, what are all the things that are going to get in the way? Whether you knew it or not, we're actually at all-time low taxes, or at least for the last few decades. It's been as high as 90%. This is top marginal rate. So there's upside, and they're already talking about that. Talk about the demographics. We have a declining younger population and an increase in older population who is not producing, therefore not adding to the economy. And the younger people, there aren't enough of them, and they're not even doing well. All the wealth is with the retirees. And then if we look at the last 50 years of the market, even with all the crises going on, we're still at all-time highs. And this is all since the whole retirement savings system, qualified retirement savings system started. It used to be that the American economy was a pension-based system. But in 1973, Wall Street got in with Congress. They said, hey, we can do this thing called the 401k. And that's where it all starts. So now retirees started having to put their money somewhere to save for their own retirement. So they put it in the stock market, and that added to inflating stock valuation. Hence the reason we see a lot of stories of multi-billion dollar companies essentially not really having a thing to show for it. WeWork comes to mind. Theranos gets worse. Enron, hedge funds, Bernie Madoff. Like, we know it's all out there. The problem always seen, where else do I put my money? I got to have a 401k. Well, we're just all adding to some of a false sense of security because, it looks like it keeps going up, and we're kind of all in this, we're stuck in the same bucket. Like, geez, I have to participate, because if I don't participate, then I'm not going to get the gains. But then if we are all participating, we're just kind of falsely inflating the prices to some extent, because it's just been broadened out across the whole economy. And then even the S&P 500 itself, the majority of that is like just the top few companies, the huge ones, the Teslas and the Apples and the Googles. They're controlling most of the pricing of this. So it's hard to even know how useful these indexes are, but bottom line is we're all kind of stuck here. So there's a way for us to participate in this without having to deal with any of the next Black Mondays or bubbles or crises that come. So we know what the debt is today. You probably hear it all in the news. We're increasing something crazy. like by like every 100 days, we're going up $1 trillion. Like at this point, the numbers are so big, you can't fathom them. They've actually always been that big. Like even back in 1973, when the debt was 450 billion, that seemed like a lot. I'm sure at the time, people probably thought that was ridiculous. So who knows where this is going? This actually came out in about May 2024, and we're already paying more net interest, just interest on the debt, than we are in defense and veteran services and Medicare, Medicaid. I mean, that's insane, because when it comes to what we call unfunded liabilities, things like Social Security, Medicare, Medicaid, it's not 34 trillion. That's the debt. These are promises that it's future citizens, future tax dollars are going to pay for this. The idea is either the benefit's going to go away or they're going to have to raise taxes or something. All right. Really, what they've been doing is, instead of, because can't take more taxes or whatever, they've been just printing money to fund these current versions of the unfunded liabilities. So that's creating the more debt. Watch this.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollars. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, cause it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Cool. So we're doing well. All right. Those kind of things are out of our control. I'm going to show you what we can control in the next part.